This is the Friday edition of Agriculture Today. Thanks for being along once more. As noted yesterday, we're allocating extra time this week to the grain markets, given the dynamics that we've seen in these trades, to say the very least, in recent trading days and even weeks. Along with us once more, Dan O'Brien, grain market economist, K-State Research and Extension. Dan, thanks for being along with us once more. When we left you yesterday, we had talked over the sorghum and grain sorghum, corn and grain sorghum markets, but our attention now turns to wheat and soybeans. And let's start with the wheat, where we see amazing prices pushing $7 or better on the board amidst what is projected to be a record world wheat crop. Go figure.
Well, as you and I have talked about, I don't doubt that if you assume average weather conditions from here on out in these areas, and that we avoid problems in key production areas, including ourselves, the Black Sea region, and Europe, that you could come to that. But you're betting on the average. In the materials we put together for this week on Ag Manager, you can see what the global moisture maps are, and we're dry in parts of Europe. There are parts of Russia, northern part of Ukraine, pretty dry, and in the United States, you look at the drought monitor map, that thing's expanding. But we kind of gotten out of that with some major rains, at least as I was watching that on that map the last several weeks. But now again, that it seems the western third of Kansas is getting enveloped in these areas, and when you look to the north of us up into the spring wheat areas, almost all of North Dakota and now South Dakota, parts of Nebraska, all getting caught up in this dry weather thing. There's some I guess we call hybrid weather forecasting modeling efforts that also show that at least in the short term, there's some pretty dry areas that are developing in the eastern and central and eastern corn belt too, especially at, I guess, the northern half of the eastern and central corn belt. So of course that's great for planting weather. We'll get the crop in very well, but and generally a person can get overwrought with hand wringing and say, oh, drought is coming, etc. But the point is that it's in some of those areas there are indications of some pretty dry conditions, and really if anything else, all the support we have in these grain markets. We're talking soybeans today. Talked again feed grains yesterday. Has to do with a whole combination of factors all together. China, their demand pulled for a number of things. Soybeans, of course, they're feeding some of their own wheat. We talked about feed grains in play. And although it's not directly a wheat issue, the corn. The dry weather for the second crop corn down in Brazil, affecting us as the world and ourselves start to pull corn demand in and create a vacuum and a need to have a backfill, maybe is a good term for wheat or whatever we can to still get done our livestock feeding and maybe other things too. So anyway. Those key factors and our own worries about these dry areas are all at play right now, and as I guess doing anything but helping grain traders, and not just speculative traders, but commercial users, farmers, etc. There's nobody sleeping easily right now with regard to the grain markets, just because of all these levels of international uncertainty on both the demand and the supply side.
Then what are we seeing, Dan, in local wheat basis trends around Kansas? And of course, you track these routinely. Obviously, strong prices, but what within that are you reading?
Well, it looks like when in the western third of the state, for the locations we follow closely around the Colby area and also the Dodge City, Garden City area, we wheat basis is holding up very well. And of course, that's where we'd expect, particularly Southwest, the wheat feeding side would come in and be supportive of those markets. A little bit more volatility. Just a penny or so weakness in say the Salina and Hutchinson areas, not quite as strong an uptrend as out in the west. When you go to the east, Topeka, I'm really looking at the heart of the terminal markets right there, where we're at in terms of those Topeka elevators. Some weakness coming in the last few days. Pardon me, with regard to wheat basis. Interesting again. Columbus, Kansas is a place that in the Kansas grain markets we don't pay it. We haven't been paying enough attention to. Right now, their basis just chugging right along, level, steady. The strongest it's been since and including 2017, and just going sideways. Interesting to look at that area and see what feed grain prices are doing, as well as soybean prices. So interesting, and so that's an area where we're pulling grain, if we can, down to the southeast more readily. We can do it from anywhere, but that's logistically the easiest. And so we've got some southern U.S. grain market demand pull influences coming in and affecting that. So you're asking what the basis is doing. Pardon me, western third of the state, very, very well and steady. Southeast, about the same. Pretty much the same in the central and northeast, maybe a little bit of weakness emerging by just a few cents in those other areas.
We are 6 to 8 weeks ahead of harvest, depending on where you are in the state, of course. So when thinking about bringing that wheat to town, it seems like the most straightforward marketing approach for a producer: sell right off the truck at the scales. Dan, keep it that simple.
And the question this year is when will that truck, when the wheat comes off the scale, will it go into the elevator to get ready to be put on a train to head off to an export market, or will there be a livestock feeder with more focus than normal, wondering about the availability of that and possibly bringing that straight in? I guess when that harvest comes in, Eric, just from a local Kansas point of view, if we really do see buying of wheat, that there might be, I guess you and I need to be listening for reports of wheat going straight to feedlots. If we really are, if these situations that we're seeing really are in play, and the wheat to corn price ratios in parts of the state would indicate that, gosh, that might happen. Again, we've been calculating for as all this has developed the last couple months, wheat versus corn price ratios, and just on the cash side in the western third of the state, looking at the Colby and Garden City locations, cash wheat to cash corn prices are 92 and 95%. They're in those major markets in the West. And by the time you adjust those per bushel prices, and again, different weights of bushels, again, 56 pounds for corn, 60 for wheat is typically what we go with. If you adjust them down to a per pound basis, you have the price of wheat being 88, 89% that of corn. So I'm sorry. But anyway, the point is that would seem to be that if we're tight on getting grain to accomplish what we need to for livestock feeding, then we have a wheat harvest coming up way sooner than we're going to have a corn harvest or a grain sorghum harvest out to the west. I would say in other parts of the state, we've seen not quite, we haven't been seeing as much of a crunch, but here this week in the Hutchinson area, again, we're following that. I'm just taking the top end grain bids there. There are weaker grain bids for both corn and wheat than we're looking at, but we're just taking the top ones. And you got a price ratio in Hutchinson this week of well, on yesterday's closes, 93% with 683 wheat, 735 corn. Wow. And by the time you take that to a per pound basis, you're down to 87%. And that's actually just a tick lower as a ratio than it is out even out in Garden City and Colby. So I guess if there's something that's kind of incited both you and I to look at these markets closer, it's yes, the larger futures trends are certainly there, and it's a crackerjack deal, but the movement underneath with basis and with grains against grains to accomplish things, and that's what to me is so unusual about this particular event, and that we typically don't see wheat price below corn, and we typically don't see again, we're talking about soybeans versus corn for planted acres at times. We have it anyway. You're seeing the soybean to corn planted ratio, which is typically anymore, it's about 2.4 is about neutral, plus or minus a little bit. And so when you look at the current new crop bids for November soybeans versus Dees corn, both 2021, that it's 2.39, dead neutral. But around the state, if you look out to Garden City and Colby, you're at 2.16, 2.27, definitely favoring corn. And most of the rest of the state, you're looking at, say, 2.3, 2.4, 2.45, more neutral. But boy, out to the west, not giving many signals about to go with soybeans right now. And they don't typically do that except under irrigation out in those areas. But man, they're trying to, you're at the demand centers for that crop, and so anything locally they can pull into production for feed grains. That's what they're doing.
Well, now that we've segued into soybeans, we've seen some slippage in that market. It's been a runaway up until recent trading days, at least on the board. Just right to it, Dan, about one's marketing posture here at present moment. You talked yesterday about setting profit goals for corn and grain sorghum. Same refrain for soybeans?
Yes. As we talked about, that when you look at the slippage has occurred by some 20-30 cents, but any more, that's just what we might call noise in the market. Gosh, we're up and down 20-30 cents on this or that rumor that can come into play. And yesterday, July closed at 1502. And a quarter, so we're down to $15. Amazing, isn't it? But it's really for planting for new crop bids. Again, November 13, 18 and 3/4, and we had been spending time at like $11.80, $12. So and the new crop bids for soybeans, as pulled them up in the locations we're following. They're ranging across the state out to the west about 1229, 1234 in the Colby Goodland locations, and then out in the in southeast Kansas, Columbus about 1244. Again, Salina, Hutchinson, Topeka, top bids 1264, 1269, and what's profitable for soybeans? Well, if soybeans with less fertilizer input, unless the herbicides and seeds have jumped up more, generally we're looking around $10, $9 to $10 a bushel. Total economic costs, the cash costs per bushel are sharp, have been sharply less than that. So, but we have less bushels, so we have harder time spreading our fixed costs out. Just we have less units to do it with. So you take 9, 10, 11, wherever your farm is at, for a new crop, for your break-even cost of production, you figure for this year, and are looking at forward bids that are tremendous. 1229, the lowest across the states, like we're looking at up to 1269. There's at $10 beans, $1 is a 10% profit. At $2 is a 20% profit, and that just gets us to the bottom side of what we're looking at for these new crop bids. Just, of course, it's easy for me to say that. earlier in the same broadcast, we talked about, gosh, dry conditions are creeping in. So you don't do that without crop insurance coverage. And if you're under irrigation, you're all that much more prone to be thinking about that. But really, I think the conundrum, Eric, for almost everybody is that nobody's doubting we've got great bids, but they're wondering, first of all, about their production risk on the bottom side, and then on the other side, is this the time to make their move? And I would say that if I really, along with having more of a financial management goal in terms of deciding when to act or not, looking at rate of returns rather than trying to hit the top of this market, really to divide up your sales over a period of time, and you're not going to quote beat the market, but you don't want to lose to the market. And one way to lose on it is to save up everything and try to have the one big sale that'll do it all. And you might hit it, but you might not. But it just makes sense to diversify the timing of your sales and try to in a portfolio sense, try to package some of this together. And so I guess one thing I would say, I just want to add in on soybeans and maybe even circle back to wheat, just how amazingly dominant and predominant China is in these markets. You look at for soybeans in the last, and I was looking at the average of the last 2017 through 2019 marketing years, 17, 18, 19, 20. The average total sales of U.S. soybeans that went to China was about 38%. So far this year, the average percentage of soybean sales that have gone to China is 62%. So just predominant and knocking things around in that. Kind of circle back to wheat. Again, we haven't typically seen China come in big into the wheat market. They're the world's largest wheat producer, but with all their domestic issues that they have going on, typically China bought about, well, it's about 1% or less of U.S. wheat exports. This year, they're in there at 12. And typically the largest wheat exporter that we export wheat to from the United States and Mexico, about 14% on average, followed by the Philippines. And those two are just hanging right in there still. Again, so far this market year, Mexico at 14%, Philippines at 13%. But again, now China's come in about the third largest one, and normally they're just kind of a blip on the radar. And so you got other buyers that are getting crowded out a little bit. And so people start getting crowded out, you get a sense of urgency, and there you go. You just got arbitrage happening in the market. People worried now in their buying, and then you get futures like we're seeing happen now, where you and I have been talking each week and wondering how much higher it's going to go as we anticipate the coming days.
Well, it's a whirlwind. And in that, we'd once more invite you producers to stay on top of what Dan gathers every week in regard to the market trends and the factors influencing those trends in his notes, which are posted on agmanager.info. Dan, thanks for the big overview this week. And next Friday, we'll talk once more. Appreciate it.
Thanks, Eric. Take care.
Grain market economist Dan O'Brien, K-State Research and Extension, with us here on this Agriculture Today.